welcome back. It's 2026 and this is our first Sunday market breakdown of the year. So, congratulations for making it here. If you're new, please subscribe so you won't miss a single one of these videos every single Sunday. I'll also be posting a video this week on why you should join our free Telegram channel where you'll find a whole community to help you 10x your trading in 2026. So, without wasting your time, let's get into the very first Sunday market breakdown. So, I've already done a whole breakdown of all the pairs in my watch list, and I've selected only a few that we'll be watching this week. So, these are the top pairs that we'll be watching this week. So, each and every pair was broken down according to these criterias. I will go one by one, telling you how to do it. So, first and foremost, what we really want to see on every other trade, on every other pair that we're going to be trading this week, we first want to see at least two time frames in sync. What do you mean by two time frames in sync? We mean the weekly time frame has to be bullish, and also the daily time frame has also has to be bullish. Okay, so I'm gonna start with the very first pair, which is cut CHF. All right, so we are on the weekly time frame and we are bullish. I'll do another video later on explaining to you how I see if a time frame is bullish or it's bearish. Maybe that will get you more started. But for now, as you can see, we are currently bullish. We're currently bullish. All right, so here's the criteria. All right, so let's get into it. So this is the weekly time frame, and we're currently bullish on the weekly time frame, and we are also bullish on the daily time frame. We're also bullish on the daily time frame. So without further ado, let's go back to the weekly time frame so I can show you why I'm interested in this pair in this week. All right, so we on the weekly, let's focus on the weekly for now. Let's focus on the weekly for now. So we are at the weekly area of interest, that is a tick, and we have rejected the weekly area of interest, that is another good thing. So we already have 10% contributing to why we need this trade. So are we touching EMA? No, we are not touching EMA because here is the EMA. We are really far below the EMA, and that does not matter since it only contribute about 5%. So we're still on the weekly, and the weekly already has 10% according to our setup. So if I will just write this down, so these will be the confluences to buy. So these are the confluences to buy. So number one, we have the weekly. Weekly is bullish, and we also have the daily, which is bullish. Right. So we have a weekly and the daily is bullish. That's about 20% because each time from being bullish, it's 10%. So 10% for the weekly and 10% for the daily time frame being bullish. And number two, we are at the weekly area of interest and rejecting the weekly area of interest as well. Area of interest, right? So that's another 10%. So as you can see, we're already 30% up on why we need to take this trade. Are we touching the EMA? No. Then the candlestick rejection right here. We have this candlestick rejection, the blue. We have 1, 2 candlestick rejections, and that is a good thing because we need that in our trading. It means price is rejecting that area. So number three, we also have the weekly candlestick rejection, and this is good. Why? Because the higher the time frame, the stronger the trend, and the higher the time frame, the stronger the rejection for the candlesticks. You should watch that in the if you should read that in the candlesticks Bible. It will show you more on that. So let's go on. Are we rejecting from the previous structure point? Yes, we are rejecting from the previous. We are also rejecting from the previous structure point. So that is a good thing. Um, Number four, rejecting from the previous structure point. Okay, so this is another 10% to this trade, another 10%. And we have number five. Are we rejecting around psychological level? Let's see. Are we rejecting around psychological level or not? Okay. Currently, no, we're not rejecting around psychological level because this level is not a round figure. So let us move on to the next one. It's patterns. It's a break and retest, and it's a good thing that we're breaking and we're retesting this on also on the weekly time frame. And mind you, this is 20, 30, 40, 50% already. So this is a good thing. Let us move on to the daily time frame. As we're moving on to the daily time frame, I want you to keep in mind that we're going to search for the same things on the daily as we were doing on the weekly time frame. Okay, so on the daily time frame, we're also bullish, like I said. And are we touching the EMA? We are not exactly touching the EMA, but we're pips away, doesn't count. But we are also at the daily area of interest and we're rejecting the we're also at the daily area of interest and you've already rejected the daily area of interest, so this is good. So we're rejecting the daily ar- areas of interest, so that's another 10%, and this is good. So we're above the EMA. We are at the area of interest for the daily and we are also rejecting it. Are we rejecting around psychological level? Let us see. 600. Let's see. Yeah, we're also rejecting the around psychological level at 600. So that is good. The daily rejecting around psych level at 0.57600. All right, so let us move on now that we're here. There is a 5%. There is a 5% to our trade, and let us move on to the 4-hour time frame confluences. This is how we break down the chart. We just don't trade for the sake of trading. We have to break down each and every pair and see what we do. All right. So the first thing is on the 4-hour time frame, we are bearish. Why are we bearish? Because we are trying to get to the areas of interest. Mind you, we've already come down to the area of interest and we have already rejected it sometime, but I believe the price is just going to come down a bit, play around here on Monday, create a shift of structure and give us a point upwards. So what are we going to be doing from from Monday when the market opens. I'm expecting price to drop down, play around a little bit, also giving us a shift of structure so that we can enter the trade and take it. So I'll probably enter the trade around here when it gives me a shift of structure, and my stop loss, it will just a few pips below, and my first take profit will be here. But I'll be targeting a 1 to 2 risk to reward ratio, a 1 to 2, but I might also ride along to take this much, right? So this is only on card CHF, and this is my most favorite pair for the trade. Okay, for the week, my most favorite pair for the week. So without wasting more time, also, if you have any other pairs that you want to trade, that you want to watch for this week, you can just copy this and go and check on your own. Are you bullish or are you bearish? You need two time frames in SIG. You also need to be rejecting the area of interest. You have to be touching the EMA and having a candlestick rejection. So already this is a 20, 30, 40, 50, 60, 65% trade. And once the 4 hour gives us a candlestick rejection, a rejection from previous structure point, or maybe a pattern, a break and retest, a shift of structure, and an engulfing candlestick, that will be my entries on the lower time frame. So basically, when price just plays around on Monday, we'll be checking it, and then if it gives us a shift of structure, we take the trade. If not, then we move on to the next pair, because we are not rushing. We're only going to take A plus trades, and that's what we do to preserve our profits and our money, because what we want to do is to stay in the trading game for a long time and not burn out on the first trade. All right, without wasting more time, let's move on to the next pair for the week. So this one is a continuation. This one is a continuation trade. It already broke and reaches this one and move up to the upwards. And this is another area of interest, and the range psychological level 0.5300. And let's move on to the daily time frame. Why I'm saying it's a continuation trend is because it already came and reaches this first area of interest, and it's coming to this area of interest. So what I want here for price to do, for me to take the trade, I want it to just break and retest this area of interest, and so I can take it. So in actual fact, it has already broken the area of interest. All I needed to do is just give me just a few more confluences, or so that I can take the trade, because we've already broken and retested this, maybe a candlestick closer. So every candlestick opens up with a wick, no matter how slow or how small the wick is. Every candlestick has a wick. So I'm going to be waiting for a wick pullback on the next candlestick, and then I'll be entering on that wick pullback here on the 4 hour. I'll be entering and I'll be targeting the next higher high. Why am I entering on the weak pullback? Because a weak pullback on the 4 hour time frame, it means that price has already broken and retested and given us a new opening setup on the lower time frames. So I'll just be looking for that on this pair. Let us move on to the next pair. This is Eurocard. Eurocard is also a continuation pair. Like said, we've already broken and retested this area of interest. This was a trade that we took last year around in December. So now we've broken this area of interest on the daily. Mind you, we're also bearish on the weekly time frame, and on the daily time frame we're also bearish. So what I'm looking for on the daily time frame, I'm looking for a candlestick closure just below this little zone, and if price closes below this zone, gives us another weak pullback into this zone, then I'm going to enter on that weak pullback, and I'll be targeting this low, and our trade will be a 1 to 1.7, which is more than what I want because I only trades a minimum of 1 to 2, and that's all we want. So we'll be entering on the lower time frames, of course. So on the 4-hour time frame, like I said, I'm going to be waiting for a break below this little zone because right now the price is just consolidating. So I'm going to need a break below and reaches so that we enter, and we're already below the EMA. We've already broken down the daily area of interest with a random psychological level of 1.61100, and that is a good setup. I actually want this, so I'm going to put it here on my top pairs. This is my number one pair for the week. So let us move on to the next pair. Okay, on this trade is also a continuation to the upside. So what I'm looking for is to buy on the we're going to buy either on the weekly area of interest 1 or the weekly area of interest 2, wherever price is the cleanest. So we're just waiting for price to reach the area of interest to give us a continuation up, and this is good. So this is also a weekly area of interest and a daily area of interest. We have broken and retested each. We're also retesting the previous structure point. And so, like I said before, every candlestick every candlestick gives us a wick first before going up to the upside. So I'll be entering on this candlestick wick. If it gives me a shift of structure on the lowest time frame, I'll be taking this, and it will be a 2.42%, and I'll also gladly take this trade because it's a good setup and I love it. All right, so remember to take those criteria that I explained in the first way. That will help you uh, set up your trading. Right, let's move on to the next pair. The next pair is also GBP card, and it's a bullish trade. We're waiting for price to reach this area of interest, give us some confluences, and then we move on to the next pair. On this pair, we're also waiting for price to reach the weekly area of interest, give us a shift of structure on the lower time frames, then or a bullish engulfing or a morning star formation, so that we take the trade to the upside. So remember, all we need is one trade, and for us to make a profit, we only need one to make a profit this year. So only be taking the most best A plus trade setup, and these are the pairs that we'll be watching this week. Feel free to go and watch them. Take a screenshot, watch them on your own, and then you will know which pairs to trade this week. Thank you so much for watching, and come back for another video next time.